Hi, everybody. This is Gary Dean, and this is our video report for Wednesday, March 30th, 2016. Not sure who you give the win to today. Obviously, the S&P closed up 9 points, but the Bulls really had every opportunity to really try to run this thing. They opened it up some 13 or 14 points, and from there, we saw a high fairly quickly, and from there things started fading. We had a couple tries back up to the top, but we just really didn't bust through anything. So it is frustrating, and I'm not really changing my stand. I think that if if they were really going to start ripping this thing higher, I think that they would have really made a good go today. They didn't. We still have plenty of our internal indicators that are at levels we haven't seen in years, but yet we have the S&P that still needs another 70 points to go to get to the previous highs. So it's almost like people are making huge bets on that we are taking out the highs, but yet a lot of the big boys really are suggesting to their clients to start to take profits. So it's going to be interesting. Like I said, until we take out the 2117, this is still considered a downtrending bear market right now. Bear market doesn't mean it has to be something like in 2007-8 or even in 2000. It just means that we're going to be making a series of lower highs and lower lows, and so far it's still there. It's still intact. So these are some of the internals that I'm talking about. This is, we have to go back a few years before we've seen the advanced decline up here. But yet, look at where the S&P is compared to the previous highs. So there's just a lot of, people jumping in right now. And then if we take a look at the put-call ratio, you can see that we had a spike up, but there's just no reaction in price. And it's it's one of those things that with all the internals at where they are, it's eventually it's going to pay off. They're going to have to pay the piper on it, and when they do, we've seen these nonstop moves, and once they run out of steam, they end up coming straight back down again. And like I said, I believe this is going to happen. It may not happen all at once, but we're probably going to see a 150 point drop at some point, and it's going to take a lot of people by surprise. Taking a look at the bullish percent, again, levels we saw these at were when we were at all-time highs, and the size of the move, it's very similar to what we saw here. And then it actually went a little bit higher, but then from there we saw it roll over. And again, the S&P is nowhere near this high right here. So, there's a divergence that's in place. Now, if we just take a look at our regular charts, taking a look at the well, let's just start off with the Dow. This is one of the things I've been saying. They may try to take the Dow up to the 78% retracement. They succeeded today. But this is where things start to get interesting. If we take a look at the NASDAQ, and you notice that these are the cues right here on the daily chart. First, we have some bearish divergences in place. Second, it still has to go all the way up to the 111.41 to get to the 78% retracement. So technology is not keeping up with the Dow that just reached the 78% retracement. And if we look at the S&P here, and let me just draw these retracements up here, and I'm going to go from here to here. So this is the bigger picture as far as the retracement, and that's where we kind of hit today. But going from just the rally part of it, which I'm going to show you right there, which is this high to this low, we already passed that 78. So the S&P is already past it. We have the Dow and the technology, or the Qs, are just reaching this level now. So things are kind of a little out of whack on that part of it. But here's another one that I want to show you, and I was showing you before the time and the price from this low to this high. Now obviously this is exactly where the high was, But what happened was we busted back up. So what I basically did, and again, what I'm looking for is just some clues. I'm not saying that this is, some kind of, make a huge trade off of it. We're just looking for some cues of previous times. And what this is the low to the high, because we had a very similar pattern where we spiked up, came down, and then went up. So we have the up, down, and up. And from this low to this high, it's exactly where we were. So it still has that fractal pattern that's in play from this move here, and obviously we know it took place after. On the 60-minute chart, well, I'm going to go back to the daily. Hang on one second. So if we look at the daily, again, look at the bearish divergences that are in place here, and very overbought. And if I show you the 60-minute, again, bearish divergences, we made it only down to the 50% line as far as the giving a little bit of a breather, and then we shot back up. But here's another thing that again I kind of picked up on, and this was going back to December of last year. And what happened was we had the drop, and then we spiked up. Now what this yellow box is that from this, just how much we actually went above the previous high. Now I'm showing you that because if I just take it and bring it here, you can see it's the same thing. So if we take a look, it's exactly where the high was. Now after we made this high, what happened after that. We headed down, and this is coming off of some serious bearish divergences. So we're, as much as it's frustrating, I feel like it's a I'm repeating the things over and over, and I don't mean to do this. I wish I had some, some more information. But when the bulls are in charge, the market gets very boring. It gets very boring until everybody becomes complacent, which we're seeing right now. And then what happens is the rug gets pulled out, and then the technical analysis and everything works. And when we've seen this over and over for the past 5 years, when the bulls are running it. It's just boring. Your technical analysis pretty much gets thrown out the window, but your overall perspective of what's going on is still in play. It just gets frustrating, and I think that's what's going on now. And we're seeing the talking heads like Kramer getting really bullish again on this market. So we're seeing this happen, and like I said, I think that patience is definitely something that will pay off in the not so distant future, whether it be 100 or 150 point drop before we come back and possibly test the highs again. We'll have to wait and see, or we just could be making an intermediate term top and we're going to head straight down. But when we head down, we know that we get big bounces, so we're able to trade in and out. It's just when the bulls are in charge, they go straight up with no breaks, and that's why things head down very quickly once they run out of steam, which I kind of believe they are getting very close to running out of steam right now. But tomorrow's the last day of the month and a quarter. I think they're pretty much going to try to just hold it here into tomorrow for that, and then come Friday, Monday, and going into next week, we could see a lot of selling hit because they were just really holding things up for the end of the month and the end of the quarter. So with that, let's see what plays out tomorrow, and have a great night.